There are two ways the government takes your money. One you see, and one you don't. Taxes are something you see, but tariffs, you don't. And it looks like tariffs are here to stay. In this video, I'm gonna break down tariffs versus taxes as a licensed attorney who is not your attorney, what the differences are, and who really is paying the price. And it starts by understanding how the financial system of the United States government works, because the United States government has one source of income, and that source of income is none other than tax revenue. The government then takes that tax revenue, and then they go out and they spend money. These are the expenses of the government. Now, it might look very straightforward. You generate $100 in taxes and then you spend $80 of that, but that's not what happens. In fact, the United States government has way more expenses than what they're generating in tax revenue, and then they have to supplement this tax revenue through the help of debt. This debt is known as deficit spending, meaning the United States is spending money they don't have in order to fund all of these expenses. And if we put some numbers on it, it'll help you understand what's going on. In 2024, the United States government generated around $4.9 trillion in tax revenue, and then they went out and borrowed an additional $1.85 trillion in debt. This is the deficit spending in order to fund a total of $6.85 trillion worth of expenses. It generated a little under $5 trillion and spent almost $7 trillion. All of this was financed through debt. This is where you can go down three different rabbit holes. Number one is, why is the government spending so much money? Number two is, where is this debt coming from? And number three is, where is this tax revenue coming from? And for the purposes of this video, I'm gonna focus here on this tax revenue because this will help us understand taxes versus tariffs. So let's go down this rabbit hole. The United States has many different types of taxes. Here are some of them. Number one is your income tax. You go to work to get paid, you're gonna pay income taxes based off of the salary that you generate. Number two are the payroll taxes. When you go and generate that salary from your job, you're also gonna be paying these payroll taxes like FICA taxes, that's your Social Security and Medicare taxes on top of your federal income taxes. Then you have capital gains taxes. Let's say you go and invest your money into the stock market and 5 years later you double your money and you sell your stocks for a profit. You're gonna pay taxes on those profits. That profit tax is called a capital gains tax. Then you have your sales taxes. This is when you go to the store and you buy a bunch of things. Well, you're gonna pay sales taxes based off of the things that you're buying at the store. This is a tax on consumption. Then you have an estate tax. Let's assume that you pass away and you have millions and millions of dollars and you want to pass this down to your kids or whoever you want. That transfer of one person to the other after death is called the estate tax. It's also known as a death tax. Not everybody is going to be subject to an estate tax. This is generally reserved for the wealthy, but it is a tax that the government imposes. Then we have tariffs, which we're going to talk a whole lot about in this video, which is a tax on goods coming from foreign countries into the United States. Then we have property taxes. You go out and buy a house, well, you're going to be paying property taxes every single year, even if you pay off your mortgage, because, well, that's what the government says. Then there are corporate taxes. If you start a corporation and you generate a profit, well, that corporation is going to be subject to taxes on those profits before they're distributed to the actual individuals. And then we have, I'll put this in brackets, state and local taxes, and I put it in brackets because not everybody is going to be subject to state and local taxes, but there are certain states like California and New York which have pretty high state and local taxes. And then we have other, and I kind of lumped a whole bunch of different types of tax groupings here because I only have so much whiteboard space, but this would be things like your cigarette taxes and your lottery taxes and your toll taxes, all the other types of taxes out there. We'll just throw it in here. These are different forms of revenue for the government. So the government taxes you when you earn, they tax you when you make money on your investments, they tax you when you spend money, they tax you when you own an investment like real estate with the property taxes, and they tax you on many other things, and this is how they generate their tax revenue. Now, the United States government generates this tax revenue, but they're spending more than what they're generating. And this is where now we're starting to see a little bit of a shift in our tax code because of tariffs. Now, yes, there's a lot of tax deductions and loopholes out there. I mean, the federal income tax code is a book that's more than 2,000 pages long at 8-point font. And one of the things that it says is that investors get to qualify for lower tax rates than people who earn money from their W-2 jobs. And as a reminder, for those of you that are investors or want to become investors, my team team at Briefs Media publishes a free daily newsletter called Market Briefs, where we're breaking down what's happening in things like the economy, stocks, housing, crypto, and global markets into a fun, witty, and easy-to-read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every morning, and when you join Market Briefs, you'll also get access to an investing masterclass, completely complimentary, where I'll walk you through how you can get started as an investor and find hidden investment opportunities before everybody else. All of this is completely free, so if you want to get Market Briefs plus the investing masterclass, all you have to do is click the link down in the description below. But the concept of this tariff tax is not new. In fact, the first tariffs that we saw in the United States were imposed in the 1700s, and it was the first real form of tax in the United States. But over the years, we've seen tariffs kind of go away, and now they're making a resurgence in 2025. Now, the reason why tariffs are so interesting is because it is a type of consumption tax, but we don't know what the true cost of the tax will be. I'll show you. Let's assume that I am a company that's buying products from China, and I'm making this t-shirt in China for $50 and I'm selling it in the United States for $100. I know you could probably get this for a whole lot cheaper than $50, but stick with me for the purposes of the example. So if I'm buying it for $50, selling it for $100, and now I have to pay, let's call it an additional 20% tax on goods from China. I know that's not the actual tax rate, but let's stick with it here. There's a 20% additional tariff, which means my cost is now going to be $60 to produce that product. Now, I have a few options. I could either continue selling this product for $100, and now that tax is absorbed by me as the company, but I'm going to be only making a $40 profit, which is less than what I was making before. Or option number two is I can pass down some of that cost by doing kind of a hybrid approach where now I'm only going to charge you $110. And the reason why I'm calling this a hybrid cost is because here I was charging double retail what it cost me to produce that product. Here I'm not. So my margins have shrunk. Yes, I'm still making the nominal $50 profit margin per shirt, but my profit margins have shrunk. Or I can pass down the entire cost to you as a consumer, and now I can charge you $120, which means I'm paying 20% more, and now you're paying 20% more, and now my margins are $60 per product. So now because of these tariffs, I'm actually making more money per shirt because I'm making $60 per shirt. What's gonna happen? Well, it's gonna vary company to company. Some companies will do this, some companies will do this, some companies will do this. But the tariff tax is a tax on consumption, because if you're not buying these t-shirts, you don't got to worry about these tariffs on this particular t-shirt. This is what has so many people concerned about tariffs, because they don't know what the true cost of those tariffs will be. It's clear that if there's a 20% tariff, that the company will be paying that 20% tariff, but we don't know what the end cost to the consumer will be because there's a lot of variables out there, and that's why some people say that, well, these tariffs could make inflation worse. And yes, that is true, but we don't know to what extent because it's going to vary industry to industry, and it's going to vary company to company. But let's go back to understanding the United States financial system. Remember, the United States government is generating tax dollars, and then they're spending more than what they're generating, and then they're supplementing all this deficit spending through debt. Well, what's going to happen now through these tariffs? Well, the United States government is expected to earn more dollars from these tariffs, while at the same time, President Trump is working to pass one of the largest tax cuts that we have seen really in history, which means you might be paying less income taxes, or the government might be generating less taxes in other forms, but tariff revenue is supposed to go up. The problem is we're still not fixing this math problem, because according to the White House, in 2025, the United States government is expected to generate around $5.2 trillion in taxes from all the taxes that we just talked about, including tariffs. While at the same time, the United States government is expected to be spending around $7.1 trillion in 2025, which means we will be spending around $1.9 trillion that we do not have. Which means, sure, we could adjust where the tax revenue is coming from, and maybe you pay less income taxes, maybe you pay more tariff taxes, but unless we control our spending, this deficit spending is still a problem, which means we're still borrowing money, we're still creating inflation, we're still having all these other problems. Now, for those of you math nerds that are wondering how much tariff revenue are we actually going to generate, well, here's the math. In 2024, we generated around $77 billion in tariff revenue. In 2025, according to Treasury Secretary Scott Bessent, we are expected to generate somewhere between $300 to $600 billion in tariff revenue. Now this brings us back to this problem. We can shift around where we're generating tax revenue, whether some tariffs, whether some income taxes, whether some whatever else. But if this is the problem, how do we fix this? And we have really two solutions. You can generate more tax dollars, or you can spend less money. Both of them have a cost. Yes, if we increase taxes on you, me, rich people, middle class people, poor people, there's a cost to that because that means you're going to have to give more of your taxes to the United States government, and a lot of people don't want to do that because people don't like paying taxes. But the flip side is also a cost as well, because if we start cutting expenses, well, there's a cost to that. Because if the United States government were to cut more expenses, and we saw what happened in the beginning part of 2025, that would mean that people lose jobs because we're cutting departments in the United States government. People don't like that because that means people are losing their salaries. It could also mean that the United States government is giving less contracts to certain companies. That would mean those companies are getting less contracts from the government. They're getting less revenue. They might go bankrupt. It could mean that the United States government provides less aid to certain communities, which means, well, people would be getting less support from the United States government, which also feels uncomfortable. See, there's a cost to everything. There's a cost to reducing spending. There's a cost to generating more taxes. But there's one more cost that I haven't talked about this video. We understand now that taxes and income taxes are very easily calculatable. Tariff taxes, yeah, you can calculate it, a little bit more difficult. But there's one more tax that we haven't talked about yet. And this is what I like to call the hidden tax. Because at the end of the day, the most expensive kind of money is free money. And if the United States government could just print and borrow this money, why do we have to pay taxes in the first place? Why is this even a problem? And the reason why this is a problem is because when we have this deficit spending, this money has to come from somewhere. And where is the United States government borrowing this money? Well, they can borrow this money from regular people like you and me, but there's not enough dollars out there to keep lending money to the United States government. The United States government could borrow money from foreign countries like China and Japan, but there's still not enough money there. That's where the United States government then goes to our central bank, the Federal Reserve Bank, to borrow this money. And the interesting thing about the Federal Reserve Bank is, number one, they're not federal. It says so on their website. They're not a reserve because they're not sitting on any cash reserves, and they're not a bank because you and I can't go there to deposit money. However, they have the ability to create money out of thin air. So when the government goes and borrows $1 trillion from the Federal Reserve Bank, the Federal Reserve Bank creates this money, and then they lend it to the United States government. Now, what does that mean? $1 trillion more dollars were just created out of thin air. Our money supply just inflated. We have more dollars out there, which means the value of each individual dollar that we have goes down. The $100 in your savings account is less valuable because there's more dollars in circulation. The $70,000 that you're making from your job doesn't stretch as far because there's so many more dollars in circulation. That's what inflation is. Inflation comes from the word inflate because we're inflating the monetary supply. And so now when we create more money doing this, the cost and the tax is inflation. And the person who pays this tax is the person that doesn't understand what inflation is. See, it's very clear who's paying income taxes because you can just look at your paycheck. It's kind of clear to see who's paying the tariff taxes because we know which companies are writing the checks to the United States government, and we can kind of see which companies are doing the price hikes, and you can see who the impact of that is. But when it comes to this inflation tax, this is a tax paid for by everybody because now it's a tax on what you buy, always, everything, because the price of everything goes up. But the real herder in this is the person that doesn't understand inflation, because while everybody is hurt through inflation, some people, the investors, are the ones that are getting rich because of inflation, because that same inflation is benefiting asset owners, is benefiting stock market investors, is benefiting real estate investors, is benefiting the investors that understand that this is happening. And that's why your financial education is so important. A lot of people get caught up in the politics of taxes and tariffs and this and that, and they get caught up in the emotions. I want you to understand the finances. I don't care if you're right wing, left wing, middle wing. I don't really care, because at the end of the day, the money that you need to feed your family and to put a roof over your head is green. And that's not red or blue. And that's why it's important for you to understand this. That way you can learn how to win in this economic system. A lot of people get caught up in the emotions. I want you to understand the finances so you can take care of your family, because the government's not going to do it for you. I don't care who's in the White House. It's important for you to take care of your own house. And that's why your financial education is so important. That way you can win in this system, because it doesn't matter who's in the White House. This trend doesn't seem like it's slowing down. And this trend hurts the average person while making some people, the financially educated, wealthier. And this is where, again, if you want some additional resources, you can check out the other videos I have on my channel, or you can check out Market Briefs plus the Investing Masterclass. I have that link for you down in the description. If you make $80,000 a year from your job, you need to make $80,000 a year from your investment income to be able to quit your job and live your life without changing anything you're doing. With your job, you have to go into work every single day to keep getting paid. With your investments, once you put your money to work, it'll keep paying.